Hello, everyone. Today I'm going to look into gross margin or gross profit of Tesla on its automotive segment of the business. And what you see in here is the company's 10K, which published at the end of January this year, 2023, and also 10Q that published at the end of April 2023. So 10Q basically is the first quarter 2020 three, and with comparison to first quarter of 2022. And 10K is the full year of 2022 financial in comparison to 2021 to 2020. So I copy paste that data into Excel. And really today we'll be focusing on gross margin or gross profit. So again, right, we'll be focusing on, we'll dive into the automotive segment of the business. So this is the total revenue on automotive 2022, 2021, 2020. And then here is the cost of revenue, or sometimes we call it cost of goods sold for 2022, 2021, and 2020 on automotive segment. And this is the gross profit from the 10K. And this is for the entire business. So didn't separate out the automotive segment. So I added my own calculation, really the gross profit or gross margin of automotive business. So the way we calculate that is really the revenue, take out the cost of revenue, or we call it cost of goods sold, and divide that by the revenue. So for 2022, the gross margin or profit for the automotive business is 28%. And then for 2021 it's 29%. And for 2020 is 26%. Okay. So now let's do the same calculation for on the 10Q, which is 2023 first quarter, and 2022 first quarter. Again, total automotive revenue and the total automotive cost of revenue or cost of goods sold. And then here is the gross margin on the automotive segment of the business, which is 21% for the first quarter in 2023, and then 33% for the first quarter of 2022. You can see there is significant jump, right, year over year on first quarter, and we'll go back to that in little later of the video. So let's talk about the gross margin, right? So the 28%, what really this means? So this really means every dollar that Tesla generated on its automotive business, they got 28 cents to cover its other operating expenses, such as sales, marketing, right, research, and a higher margin. So why this is important? So a higher gross margin of profit suggests a business is generating more revenue relative to its cost. In this context, manufacturing, which involves direct labor, materials, and manufacturing overhead. So a higher gross margin of profit implies effective pricing strategies, cost management, and competitive advantage. A declining or a low margin, right, may indicate challenges in pricing, cost control, or competition, so which may pose risks to companies' profitability or returns for investors. So let's look back into this year, right? First quarter, the gross margin jumped on automotive from 33% to 21%. That's like 36% drop on margin. And what really happened, right? If you look at revenue actually grew year over year on first quarter by 18%. But because margin dropped, the cost grow more than double the revenue grow. Okay. And most of you probably already know that, hey, this year Tesla took a really aggressive position on Model Y pricing, right? There has been a significant price drop on Model Y in Tesla this year in order to make more sales. So again, you see the importance margin is even though revenue grow 18%, but because margin dropped significantly, so the cost of making that revenue increase double, right? More than the revenue increase. So that's about Q1 2023 to Q1 2022. And if we look the similar analysis, right, year by year from 2022 to 2021 to 2020. So let's look at 2021 to 2021 to 2022, right? So the revenue on automotive business increased by 51%. That's very impressive growth, right? Year over year. And the cost to make that revenue, right, is 53% increase. So you can tell the margin really didn't change much. So the margin, right, from 2021 to 2022 dropped 3%. So that's really all showing in here, right? So revenue grow similar line as the cost grow. And if we look at the change from 2020 to 2021, the revenue growth 73%, right? That's awesome growth. And the cost actually to make that revenue, right, increase by 65%. So um, quite a bit lower than the revenue growth, right? And the reason we can see that because the margin, right, they got a lot of better in margin. So margin improved by 14%. So that's why, right, even the revenue grew by 73%, the cost of make up that revenue only grew 65%. So you can see the importance of gross margin to a manufacturing company. Yeah. So that's really about today. Gross margin in the context of Tesla. And hope you find this video is helpful. If you do, please give a thumbs up. And yeah, and subscribe to this channel. I'll be sharing more about company financials, right, in details. And the first one we're going to go through will be Tesla. So thank you so much, and see you next time. At the end of the video, I would like to make a disclaimer that I'm not a financial advisor nor a lawyer, so please don't take it as a financial advice, but a entertainment purpose only. Thank you.